Landlords in one state are going to be paying much higher taxes in 2023 as the state passed a new sales tax on all electric utility bills. I'm Tony, and this is Real Estate Investing and Landlord News. All right, so I have an interesting article for you today, and it's going over a new sales tax on electric utility bills in the state of Kentucky. Now, I thought this was quite an interesting thing here, even though, I know most of the landlords here aren't in Kentucky, but you could see this sort of thing possibly being passed elsewhere. So, from what I understand, the state of Kentucky was trying to lower the state's income tax, right? And they had to make up for that loss in income by basically increasing sales tax on a whole bunch of different items. And one of those items was the the electric utility bills of landlords. So obviously, whenever a state or a municipality is trying to raise money, they always try to hit the landlords. I find that interesting actually because it's the case in so many different situations. But remember, whenever you're hitting the landlord with a new tax, a new fee, whatever, we're going to tack that additional cost onto the tenant's rent. So that makes housing less affordable. We're not going to eat those losses. I'm not going to eat those losses. As soon as I can, I am raising rents to make up for the additional costs. So, and I bet you most landlords are doing the exact same thing. We're put in this bad situation where we're expected to fund everything. And hey, well, that's what you can expect. So, next time you're like, oh yeah, we're going to hit these landlords hard, keep that in mind, okay? Keep in mind that you're really just hitting the renters, not us. So before I get into the article, go ahead, hit the like and subscribe button, maybe leave a comment down below. Let me know what you think. What do you think of a sales tax on electric utility bills? Now, I don't know, I don't look at my electric bill that often to see all of the fees and taxes, etc., that are tacked onto it. So I'm not sure that they're not already doing that where I invest, right? But, the bad thing is that they weren't doing that before. And I believe the sales tax is 6%. And so suddenly your electric bills are 6% higher every single month. Like I said, landlords always have a good reason to be raising their rents because, our costs are going up. Our utility costs are going up. Obviously, taxes are going up. Not only the sales tax, but I bet property taxes in a lot of cases are going up. The cost of our insurance is going up. Every single thing that we pay for seems to constantly be increasing in cost. So when a landlord says, hey, I need to increase the rent, and the tenant's like, well, you didn't improve anything, so why are you raising the rent? Well, I don't need to improve anything. Things just cost more now, and therefore you need to pay a higher rent. So anyway, let's get into this article. This article is coming from thecourierjournal.com, and it says, from tattoos to electricity, why Kentuckians can expect to pay more sales taxes in 2023. And I'm going to skip around a little bit in this article because there's a lot of stuff about, the other weird, like stuff that they're suddenly charging sales tax on. It's not really relevant to landlords. But I'm going to get right into the part where they're talking about these, rental properties that are suddenly going to have to pay, taxes on their utility bills. So, non-primary residential electric utility bills. Residents across Kentucky who own more than one residential property can expect to see a sales tax applied to the electric utility bill of their non-primary residences. The majority of our residential customers have one property, and this law does not apply. This law does apply to customers who have service at multiple residential properties, said Liz Pratt, Media Relations Manager at LG&E and KU. They will have to pay sales tax on their properties that are not their primary residence. For residents with multiple residential properties, they will need to fill out a declaration of domicile. Jill Midkiff, a spokesperson for the Finance and Administration Cabinet's Department of Revenue, said utility providers will alert customers if they need to declare a domicile location. Otherwise, residents do not need to do anything. So their way of making sure that only the landlords are paying this tax was by saying, well, if it's your primary residence, then you don't have to pay this sales tax. But if you own more than one property within the state, then oh yeah, we're going to allow you to not pay on your primary residence. You're going to pay for every other one. So just as an example, if I lived in Kentucky, I've owned 5 single family homes here in Omaha, Nebraska, right? And I only live in one of them. So the other 4, I would be paying sales tax on the utility bills. So let's say that your electric bill is, $200 a month. Okay, and I'm just using this as an example, right? So you're going to be paying an additional $12 in sales tax, which would be about 6%, on top of your normal $200 bill. So, I know that doesn't sound like a lot, right? But these things, they accumulate. And like I've said in many cases, whenever they pass these new rules, regulations, taxes, etc., right? It's like you're getting nickel and dimed to death. Right? Next thing you know, hey, I've got to raise my rents, $100, $200 a month just to cover the additional costs. So yeah, this is ridiculous. I don't like it. No utility should be automatically defaulting all customer accounts to taxable on January 1st, 2023, absent a declaration, Midkiff said. Only those with more than one account should be asked to complete the form to identify which service address is their primary domicile. Renters will need to check with their landlord to see if the metered utility service is in the landlord's name or the renter's name to best determine if they need to complete a declaration of domicile. In many cases, when you rent, your utility services are in your name and the property you rent is considered your primary residence. In this case, there's no additional action needed, Pratt said. In some instances, a landlord has service to multiple residential properties in their name instead of being in their tenants' names. And their tenants would need to complete our online tax exemption form to let us know the property is their primary residence. Landlords cannot submit the form on their tenants' behalf. So yeah, they've basically created a situation where if the landlord has the utilities in their name right now, then they will want to, in order to not pay this tax, get the tenant to transfer it over to their name. Okay? Because it's not beneficial to a landlord to be paying that additional tax. They're creating their own problems here. And you know what? They think that this new tax is going to raise this huge sum of money, like they always do. They're like, oh, we're going to tax and this is going to raise all this extra money to cut. No, it's not, okay? There's loopholes. They created the loopholes, and landlords are going to use those loopholes to get out of paying it. I know I would. Yeah, but, other things that they, also added sales tax to. It looks like if you are getting a tattoo, you're going to have to pay a sales tax in Kentucky. A tattoo for health and fitness activities. Wow, that's kind of insane. Such as recreational camp tuition, athletic instruction, etc. What else are they talking about here? A sales tax on Uber or Lyft rides. Wow. Yeah, they obviously are just trying to make up for the fact that they lowered the state income tax. And, a lot of states are doing this right now. They're trying to lower their state income taxes in order to attract business and people to their states, right? And compete with states like Texas and Tennessee that have no state income tax. So the problem is, though, that they don't know how to make up for the money without suddenly charging much higher sales taxes, without making much higher property taxes, and it's just bad for landlords overall, especially when we're the ones who are targeted, while most people won't ever have to pay that sales tax.